Hi, someone asked me in one of the groups, he said, wait, you're expecting a market decline, a bit of a correction. So, what about that? And this video is about that there's a big difference between expecting a move and entering a move. Not a moving, expecting a move. Okay, so let's say now we'll exemplify it on the Dow Jones Industrial Average Index, DJI. If you're looking at the futures, it's YM. So you would want to, there's a few places where you may enter. You're not going to just enter now. That wouldn't be, at least in my mind, that wouldn't be, let's say you wanted to right now enter now because you think we're going on a correction. It's not impossible, but it's not a very wise move because we can also be going like this and then down if we go down. Okay. And we might even just break this up as well. So if you're on any decent trade, it means we've got some leverage on. So you wouldn't want to have, you'd be stopped out very quickly or get liquidated quite quickly or just simply lose a lot of money. Okay, so you want to see where patterns are activated even at the price of sometimes being faked out. So right now we've got this potential bear flag. Okay, such a channel that goes up is a bear flag. It means that if it crosses down, there's going to be a lot more potential down. We've got this touch point, one, two, almost a third, a fourth, and here we've got two touch points. Okay, internally, we've also got this little triangle that with this blue line and the red line. Okay, we've also got a gap here, and we've also got the mid-level of the channel. So these are all sort of things that we're looking at. So if I'm looking to see when to enter a move and I want more confirmation, it's also a matter of style. I'll be looking at, if I'm looking now at the 4 hour time frame, I'll be looking at two consecutive candles below this so it doesn't fake me out and go up. Okay, that's the end of, for example, more confirmation, where you get a fairly later entry. So you are paying a price. There's always a price. Okay, to gain confirmation, you're paying a little bit in your reward versus risk potential. And you can also, for example, be waiting in the mid channel, as we mentioned. Okay, taking something like this, which would also be a double top with this one over here. Okay, for example, you would have a stop above this high, and you can go either, I mean, you can do various things. You can go at this area, for example, just above it, or you can also go later for the mid channel. This is a bigger channel. I'm not going to show here, but this is not about the partial profit taking strategies, but more about the entrances. Okay, or you can go, you can, for example, target this area. This is what I like to do. Okay, if it gets up here, almost touches, and it's not going to completely touch it, catch it here. Okay, this is contrary to what most people do. They're saying, okay, if it's going to rise, you're going against the trend, right? So I'm betting that it's going to be rejected according to the patterns that I've got. If, for example, it goes back to the mid channel, then I can take partial profit, another partial profit at the bottom band, and then run with it with a partial. So that's a matter of style again. I would wait for, where most of the non-professionals will say, oh, it's going up. It broke above this level, and I'm playing a breakout. So I'm betting the opposite. I'm betting that that breakout is going to be failing, and that we're going to be oscillating in this in this channel, which is a trading range, as it did, and possibly looking at a higher time frame that the market needs to correct. That it's we've been going on. There's a context here, of course, a bigger time frame. If we get here, a 23% after October 23rd. And if we look at actually bigger time frames, okay, so basically, the market has gone up quite a lot since September, October 22. We've gone up 38% or so. So betting that will be they're cooling off there. Okay, so uh, but what you don't want to do is you don't want to be in the middle. You want to be either at this end where you're getting a high reward versus risk, or at this end where you're getting a lot of confirmation. You don't want to be getting in now. Okay, you have no idea what the market's going to do. We have enough that we have a CPI report. Boom, it fills up this gap here. You're going short, it stopped you out. Okay, or if you're going long, it's going to retest again that double support with the lower band and that blue line. Okay, so you don't want to get inside in the middle of the range unless you've got a key price level such as a point of control or some other reason to get in. Look for the junctions. Look either for a high reward versus risk or a long confirmation. And remember, thinking that you know where the market's going to go doesn't mean that you're entering right there. You need to plan your entry and have a sound logic for it. Trade at your own risk. Return to forexlive.com.